Moving on with our project here on binaryoptions.net.au, and as you very well know by now, we are evaluating binary option strategies over the internet at your suggestions, regular traders, and just putting our stamp on the outcome, putting our interpretation on the outcome. Now, the second part here, how it works, what it should do, and the previous recording was dealing with the standard interpretation, and now it is about to take a look at what to look for when trading with the high-low binary option strategy or binary option system, like this system is being named. So high-low binary option normally implies three different indicators: the high-low middle indicator, the color CCI, as you know, and of course the KGFI here. Normally all these three factors should be considered, and the strategy is supposed to work on the 4-hour chart only. It's supposed to take into consideration one entry based on when price is below the green line there, so in the lower half of the channel, when you have a red breakout here, when the KGFI is below the moving average and below the zero, you should go on that direction buying puts in this case, and the expiration date should be, or the exit if I may say so, should be the very next candle. Because this is a 4-hour chart, I would say that the expiration date is quite generous, because you have 4 hours the possibility of trading binary options to the downside. Sometimes, for example, price may reverse a bit before moving into that direction. So this is what to look for. Ideally, what I suggest, but this is this is going to be visible on the recommendations. I suggest that you go on the lower time frame, on the 1-hour chart, and even on the 5-minute chart, and try to trade binary options. If you are trading short-term binary options, try to trade binary options into this interval 4 hours, and for short, really with really short-term expiration dates. Now these were two examples that we have identified on the euro US dollar. Let's try to find also a bullish example. For example, on a bullish part to part, we want to buy when the KGFI is bigger than 0. Here it is bigger than 0, bigger than the moving average. It is bigger than the moving average. Price should be in the upper part of the channel or above the middle band of the high-low middle, and as you very well know, you need a green breakout from the CCI. This is the green breakout for the CCI, so this is a valid signal to the upside. Normally we should buy calls here, and for the very next 4 hours we should look for higher values, and at the expiration date, as you can see, price is bigger than the striking price, and therefore it is being called that option expired in the money. Now it depends very much with the broker that you are trading with. There are brokers that are not offering 4-hour expiration dates, and depends very much on the moment of time you are trading with and the moment of time the signal appears. For example, if this signal appears during night, during Asian trading, let's say, and you are from Europe, let's say, then the majority of brokers that are offering services in Europe would not allow you to trade binary options on longer term expiration date, but it would allow you to trade binary option on short term expiration date. So the logical thing to do is to go on the lower time frames and try to identify a spot, a proper place for this 4-hour chart to buy calls. Because when you're looking at a candle, a 4-hour candle, it may be, for example, that for the previous 3 hours price just consolidating, and only in the last hour, or actually in the last 5 minutes of the candle, price to go to the upside, and the candle to look like this. So there are a lot of opportunities to trade the binary options based on this strategy. It seems so, and this is what to look for. So look for going on the lower time frames, find the proper places to engage into buying puts or buying calls as per this analysis. Another example here would be Let's try to find another example. So here, this would be a good example, but as you can see, the KGFI is lower. It has a value of 43.76. It is lower than the moving average 130. Therefore, this is not a valid signal and should be skipped. Moving on the right side, we are looking now at price being in the upper side of the channel. So basically, we need a green candle. This is the green candle. We need KGFI to be bigger than 0. It is bigger than 0, as you can see, 272.92. Bigger than moving average. It is bigger than the moving average. So basically, we should engage here into buying calls. So we engage into buying calls with expiration date being the very next candle. So while here we looked for buying puts on this candle, we are buying calls on these candles, and with the expiration date being the very next candle. Now here, as you can see on the euro dollar, we had 1, 2, 3, 4 trades just when trying to explain the strategy and the standard interpretation and what to look for. So quite a nice ratio here. Remember, this is a 4-hour chart, so things go from the beginning of October, okay, so middle of October until the end now, when we are going to look at the expiration dates to be used and the real-time examples. We're going to take all currency pairs. So I would be happy if this system will give something like 2 or 3 signals per day based on all the currency pairs that we are going to study, because the signal actually goes valid for 4 hours, for a 4-hour time. So in a 4-hour time, you might decide to trade the same asset in multiple binary options. So actually, it might be quite interesting to see how the outcome should be. Let's move on with the next subchapter, potential outcome.